this can prepare for the next fundraise. I know like this is such an, sorry, I feel like I'm going to ramble on for a couple of minutes before we just get started into the talk. It's an exciting times for us right now. I think like lots of founders are currently fundraising, and I think that this session will be great for founders to just learn on how to, really prepare for fundraising. So for those of you that don't know, we do this every month where we just bring people to talk about things going on in the ecosystem and just to really educate people on investments, fundraising, startups, the trends, and all of that. So today, before we start, we'll just talk a little bit about HoaQ for those that are joining us for the very first time. You can just share where you're joining in from, really, so that everybody's acquainted. And if you want to get to know each other, you can drop your LinkedIn as well to get this started, and also to just network and meet people. So HoaQ is a community of creators and operators backing entrepreneurs in building scalable business for Africa and in its diaspora. So we started HoaQ in 2020. Yeah, it's been a while, to be honest. Yeah, what started as, two people trying to put money into Africa has turned into a community of 50 people where we have backed over 120 startups so far, and we've deployed over $3.5 million into these startups. So, HoaQ is not only backing founders by just giving them money and, saying, oh, take my money and just go and double it. We also, double down in assisting them with partnerships, whatever you might need, ask. Somebody always knows somebody that knows somebody that knows somebody. So we are the go-to, really, I'm not trying to tutor on, but like, we're really the go-to people when you're building your business. Next slide, please. Okay. Yes, so today we have with us Femi Awoniyi. So I'm not going to go into details. I'll just let Joe, my colleague, go into that for us to introduce our speaker for today and get the conversation started. I know that's why we're really here, so let's get right into it.
Thank you for liking me. Hi, everyone. My name is Joe Kinvi, and I'm one of the community managers here at HoaQ. And I think it was last week or the week before when Femi and I were speaking. And Femi and I, we catch up every now and again regularly. Femi and I, we met at least 2 or 3 years ago when he was still at Google. He has invited HoaQ and also me to a lot of the Google programs across the continent. I think Femi, we met in Kigali, we met in South Africa last year, we met in London. So like we have some existing relationship, but that's not what prompted me to urgently invite Femi to this call. What prompted me is something that he's building. He's building this awesome tool. And like he was trying to show it to me. I'm like, no, Femi. Yes, fine, you can show it to me. But I just feel like there's a lot more people out there that will really benefit from what he's building. And we're going to leave this maybe towards the end of this call, because I feel like, Femi is somebody that if you didn't know him before, he's actually a great person to know. He's got a lot of experience, especially working with founders. He also has experience building. And a lot of his work with Google cuts across cuts across investors, cuts across founders, and now he's wearing that hat himself. He's done a lot of stuff. So instead of me introducing Femi, Femi, my first question to you is, tell us a bit about yourself and how you ended up working for the Google Startup Program.
First of all, it's an honest pleasure to be here. Joe, you flatter me seriously. I really appreciate the kind words. So how did I get to? I've worn a lot of hats. Let me start from there. I've actually done quite a lot of things, tested a few things up until the point where I got to Google. So a lot of people don't really know this, but I studied computer science in undergrad in the UK. Then went on to do a master's in investment and finance because I realized that I like money. Then I came back to Nigeria, worked as a web developer for some time. Then decided to go on to try something else because programming was cool, but I didn't really have a passion for it. Went on to do public policy consulting in Abuja, the capital of Lagos, for those that capital of Nigeria, sorry, for those that might not be Nigerian. That was fun. I met a few people. Some are actually on this call right now. And I did that for a year, realized that I wanted to support the for-profit side of things. So went and worked in a bank for 2 years as a strategy associate. And at that point, I started getting the itch for working with technology companies. So there's an opportunity that came up in the bank where the bank wanted to connect with tech companies. And one thing that I couldn't resist, I had to jump at it. And so for a number of months, I was basically looking around Nigeria for technology companies and seeing how I could connect them to the bank. And one thing that I actually learned from that, and I think it might be helpful for startups on the call, is that if you're looking to partner with big institutional companies or incumbents in any way, shape, or form, I think it really boils down to three things. Are you looking to increase their revenue, reduce their cost, or save them time? It's always one of these three things. If it's not, unfortunately, I find that genuinely you're not going to be able to move the needle as much, and quite frankly, the conversation won't go far. So after that, I got headhunted to work at an NGO that was focused on driving financial inclusion. And that was a lot of fun. I genuinely and sincerely enjoyed it. It was basically how to connect fintech companies that were using technology to connect to those underserved and those at the bottom of the pyramid. And again, one key takeaway for me at this point was basically when you're really dealing with people that don't have the educational levels or the technical know-how, you need almost like a human intermediary to lower the barriers to entry. So it's called a physical.
Femi, do me a favor.
Yeah.
It's either maybe you need to move your camera a bit, or you're that's more like
Is this fine?
No, you're still in the same. So it's either you move your or you go behind a little bit because your head is kind of cutting.
Oh, got you. Is this better?
Maybe are you using a desk like a laptop? So maybe you might have to this is much better.
Much better.
I just want to make sure I see the top of your head.
No, it's very important.
Okay. I'm sorry to interrupt. I just wanted to have you in frame.
No worries. Yeah, so I did that. So it's called Enhancing Financial and Innovation. It's called EFINA. That was the name of the NGO. It was a lot of fun. I got to understand how a majority of Africans really operate. A lot of people, when they think of tech, they think tech is really this wide-scale thing, but it really was scratching the surface on the continent. And then I did that for some time and then got headhunted to Google. And that's where I had the privilege of leading the Black Founders Fund for 3 years and 3 programs. I'm sure we'll talk more about it, but I just wanted to skip that quickly.
So Google literally came and say, "Sir, we've seen all the work that you've done. Come and work for us."
Yeah, I was lucky in that regard, to be honest. That's what they did.
And looking at your background, it feels like when people see you, they just think, "Oh, this person just landed at Google." But now that you give me the background, it's very obvious that, or it sounds like the next step, because you've really built a lot of experience dealing with founders across the country. And it's just an experience that I'm sure, obviously, Google came, wanting to get a bit of that. And when you were at, Google, you led 3 programs over 3 or so years. And I'm sure that you've reviewed a ton of Black Founders Fund application. I'm going to go straight into it. And you can even talk about the fund for people who don't know what it is or what it was. What is the one consistent mistakes that, you've seen across all these applications? And I don't know how many you've reviewed. I'm sure it's thousands. Maybe talk about the program itself, but also what is the one mistake that you've come across that didn't help the case of the founders that weren't selected for the program?
No problem. So for those who don't have any context, the Google Black Founders Fund is essentially Google's way of supporting Black-led businesses globally. So there was actually a Google Black Founders Fund, US, Europe, Brazil, and Africa. So I led the one in Africa. And what the pitch was basically connecting Black founders with the best of Google. So Google's people, Google's practices, and Google's products, right? So it's essentially hey, you're a Black founder, you've hustled to get to this point, let's help you go from whatever level you are to the next. That was the overarching objective. And Joe, I looked at a lot of applications. So year one, we got 3,500 applications. Year two, we got 4,500, and year three, we got 3,300.
So you reviewed 10,000 applications.
Yeah, we had partners, but largely yes, to be honest. And
Wow.
It's templates. Now, to your question about mistakes, I don't know if it's just one. There were just so many. One of them, and just to start with the lowest one, is some people don't really fill the forms correctly. I don't know if it's a factor of not reading the questions properly or just not having that attention to detail. But a lot of people I found were, either put the wrong questions in the wrong places or didn't complete the forms, or it was one of those weird ones where I would see some applications and be like, why? I think another common mistake that I saw, and I think this one's more pertinent, was I think there's some really amazing ideas in Africa, but I don't think many founders have found a way to describe it very succinctly and very easily. And the reason why is, imagine, again, put yourself on the side of those reviewing. Imagine you're looking through 3,000 plus applications. You have to go through quite a lot. And as you'd imagine, those that are really good applications and those that are clear would be at the top, because, for instance, from year two, we had 4,500. We can only support 60 startups, unfortunately. I wish we could do more, but that was all we could do. So there are limited slots. And if your application is really good and clear, you obviously go to the top. If it's you're a good application, but the clarity isn't too clear, you'd maybe fall in the middle. So some people might not have gotten in just based on the fact that they hadn't clarified their applications to the full extent, to showcase the real value they're creating, or the real extent of how good it is, the product that they're building. So I would say, just as a rule of thumb, and this cuts across when it comes to fundraising too, if you can find a way to really explain your idea in a very succinct way, that would do you a world of good. The last one I would say is maybe just lying. Some people just flat out lie. Just flat out lied in their applications, man. And even if it's not obvious at the initial selection stage, but by the time you get to interviews, it starts becoming clear that, hey, this isn't what you wrote, right? So I would say those are the top three ones. I'll pause there to see if there are any other things we want to touch on.
Yeah, I'm just curious to, what sort of lies are people telling? I don't know. I don't. It's minute, but like, why do you need to? You don't need to lie.
Some people like that. I think that entrepreneurship as a whole is a daring act, and I think some people take that to the extreme. So I spoke to, let me give you a practical example. I spoke to a guy. We got to the interview stage. First of all, he wasn't a Black founder. That's right off the bat. He said he had a product that had, scaled into a number of regions. By the time we spoke to him in the interview and started getting some more context, it was very clear that the product was still very early. And the customer segment he was mixing up his customer segments. There was no alignment between what he had submitted and what he was saying. It was very clear that, he almost forgot what he submitted, to be honest. So I think some people try their luck. That's why they lie. But I would say generally it's not advisable. It's one thing for you to massage the facts a little bit to make your startup look good, which is quite common, to be honest. I wouldn't say it's best practice, but it happens. But just flat out lying doesn't help.
Mm-hmm. That's interesting. Now, flipping this onto the other side, the successful applicants, one obvious thing is like, clear application, good application. But even after that, what was Google looking for? And what sort of, like, who the people that you selected as part of the 60 out of 4,500, like, what made them top 60?
So I think there were a couple of things that had going for them. I'll share as much as I can publicly disclose. I think one of them is, just evidently having a good team, a good founding team, and they fit like a glove, right? Like, even if it's not just the founders, but the senior team and who they put in the applications and their general decks as the team, you could tell that there was some degree of cohesion here. They were approaching a sizable market, and the market is growing. One thing Google was very, very big on and remains good and big on, sorry, is tech. The tech has to be sound. I mean, Google is foundationally an engineering firm. I know we have all these extra layers on top of it, but really it's very, very, very big on tech. So the tech has to be sound and be able to showcase that it's scalable. So I found that a lot of the top applications had that. One thing that Google was very big on as well is women representation. So I'm sure, Joe, when you came through to our events and you heard us speak, you could tell that supporting women and making sure that women were showcased was very big. Something I personally hold dear as well. So, and I think the last thing I'll touch on was an alignment with Google from the standpoint of how can Google help you scale? Because there are a lot of amazing businesses out there that may not be aligned with some of the way Google wants to support technology companies, or Google might not have the right tech stack to help you. A lot of people who got in, they ticked a lot of those boxes. And I want to state, to be very, very clear, I think there are a lot of fantastic companies who didn't get in. And this was one of my biggest pain points, really. But if you're talking specifically about the Google program, I would say they ticked a lot of those boxes.
And what you just described isn't very far from what a VC is looking for, right? Because like if you go to talk to a VC, they will invest, they have their own investment thesis, and whatever you're building needs to fit into that, right? So it's not foreign to anybody who's trying to raise capital to understand that, oh, the firms that I am speaking to, my company needs to somehow match their investment thesis. So I think it's very clear. And I took a couple of notes here, which is quite obvious when, again, like, it sounds like Google was taking Google assesses this company as a fund or as a VC, because talk about people, which is, the people build the business. You talked about big enough market. You talked about technology. You talked about scalability. And then you talked about like some sort of diversity in terms of, team composition. Am I right to say that Google fundamentally reviews these applications as a VC? Am I right to say that? Oh, hello? Did we lose Femi?
Yes.
Okay.
Let's just give him a couple of minutes.
Yeah.
Seconds, maybe.
That's okay. We'll wait. I thought it was me. But...
No. Okay.
Hello?
I think he's back.
Hey, Joe.
Hi, Femi, are you back?
Yeah, I'm back. Sorry. I heard the question though. I would say to a large degree, I would say closer to an impact investor than a typical VC. And the reason why is Google was very big on trying to leave a mark. And I think Google remains big on this, to be honest, even though I'm not there anymore. Leave a mark on the African entrepreneurial landscape and see how we can actually create ambassadors, right? So there was, like, you're right, a lot of the same things that a typical VC would look out for, Google looked out for. I think the fundamental difference is it was non-dilutive funding. So Google wasn't taking a stake in the businesses. It was basically a grant, a fancy way of saying grant, although we didn't use that word. But so there was less emphasis placed on the return on investment, more emphasis placed on supporting the founders and supporting the startups and helping them scale. The typical VC, and considering I work with a lot of investors and VCs right now, there's definitely a lot more emphasis placed on how is this money going to 10x, as an example. Google didn't necessarily wear that same hat. It was more we want to make sure this is a good business as a whole, but then how can we support people that are in alignment with what Google held dear? Like I said, strong tech and frontier technology, women, and ensuring gender diversity, so on and so forth. So I'll say impact investing probably encapsulates what Google's approach was a little bit more.
Okay, so also I believe that this is the last question on Google. I believe that one thing that Google really does is, outside of providing capital, they also helped a lot of the founders raise capital. Like, what is the key advice that you may have for founders who are raising capital on this call, mostly based on your experience from working at Google, because I know a lot of them went on to raise like millions, right? And Google plays a lot in this, and like one of our companies, AudioMob, like I even know some Googlers who invested in that company because of the founders program, right? So like, do you have any advice? Have you seen what worked for these founders? Any tips you want to share with people on this call?
Yeah, so I think the tips I've shared typically has changed over the last couple of years. And the reason why is because I think fundraising shouldn't be looked at as an isolated, take the macroeconomic perspective. So I say this, and I'm sure you know this, raising in 2021 is very different from raising in 2024 as a founder. It's so much harder to raise now. So in I think a lot of the same advice I would say holds true. You need to have a strong team, and this applies to solo founders and with co-founders. And the reason why I say this is because to a large degree, investors really focus on the team. They focus on the people. But I think now the emphasis on expertise is the cutoff mark is a lot higher, because investors really need to show both their LPs to invest in them, and any other stakeholders that they report to, that hey, we can guarantee that this is, to some degree, that this is actually returns, right? So I would say the bench is just a lot higher now. But across the board, I would say having a strong team, being able to market, now the emphasis on traction is a lot higher. So let me give you an example. In 2021, Joe, to give you a trend, there are a lot of very early stage ideas who would talk to a VC. The VC will say, I'm backing this founder, and they'll raise off an MVP. Even in Africa, typically in Africa, you need some kind of solution, but then it was a common trend. Right now, it's very hard to do that unless you're a second-time founder. And the reason why is because funding is, and I have to say kudos to HoaQ Club and Joe, you're on the team, because I know you do support early stage founders, and you're absolutely needed in the ecosystem right now. Want to see traction. They would want to see that you validated your model. For those important that have a realistic view of what the landscape is saying right now. And I think most importantly, being able to tell a compelling story. Let me give you guys some insider information around what fundraising really about. It's really storytelling. So able to the core of.
Sorry, Femi, I don't know if it's just me, but your connection is a bit choppy.
Oh, hold on, please. Just pause. Let me just change it. So 1 second, please.
That wasn't just me, right?
Mm-mm.
Okay. How are people finding it so far? Give me a thumbs up if you're loving it. Notifications. You can comment if you want, but I'm really enjoying this. I hope you are too. Okay, that's a lot of thumbs up.
Cool.
Somebody has raised their hand. Okay, that's plenty. Okay, right. Great. I'm finding it super interesting.
Thank you for the thumbs ups.
Yeah.
Is this better?
Yeah, let's go back to it. You're going to tell us about the storytelling.
With regards to storytelling, what I've found is founders have the unique ability to be able to create a fear of missing out in investment. Trying to share this with startups to guide pitching their businesses. Want to show is that, hey, I have such a good business that you really want to pitch. Sorry, Joe, is it still choppy?
I can hear you better now, but there's a bit of choppiness in there.
Please 1 second.
That's okay. And I know this is not Femi's fault. So
Tell us why. Whose fault, Joe?
I don't want to be naming countries' names, but
yeah,
right.
I think this is internet. I hope this is better. Awesome.
Yeah, it's the latency is better. Okay, let's do it.
Awesome. So I was just to encapsulate the point on storytelling. It's a bit of a science and an art in the sense that you're working with numbers, but really you need to communicate it very efficiently. But when you're talking to investors, what you really want to incite, and Joe, I hope this is not revealing too much about HoaQ Club, but really it's about showcasing your solution and your idea in a way that instills the fear of missing out on the investor. Investors don't want to miss out. They don't want to miss out on the deal. They are driven by saying, hey, this looks like a good idea. Let me keep it private, sign the check, and then display it to the world, right? That fine line of being able to showcase that, hey, I am the next big thing, and I'm being able to weave that into a very cohesive story, I think is the common traits I've seen in all the best fundraisers. So I would implore you, startup founders on the call, as much as possible, try to find a way to encapsulate your business idea in a way that, again, think about it from the standpoint of an investor. How do I make this person feel like they don't want to miss out on this deal?
I love that. That's pretty cool. Yeah, FOMO is a big thing. Yeah, and I feel like you're spilling the beans, but it's you, so I'll let you go with it. Now, you've left Google and you decided to go build something. And this tool that you're building is mostly for founders, but also investors. Can you tell us a little bit about it?
Yeah, so in my last year of Google, I spent a lot of time thinking about what I really wanted to do within the African startup ecosystem. I realized that so I'll share a statistic that breaks my heart. If you look at global VC funding, the percentage of VC funding that comes to Africa is around 1%, typically less, but around 1%. And that statistic breaks my heart. It's something that I really, really wanted to do something about. So what I decided to do was spend some time thinking about what my personal North Star was. And I decided to dedicate my time to connect African startups to global capital. And I decided to do this through a consulting firm, Magna Collective, but also through a tech platform called Vesta.ai. So Vesta.ai is basically a technology platform that brings efficiency into the investment process for investors and for startups. So for startups, what we do is we allow them understand their investability from the perspective of an investor, because a lot of startups don't actually get feedback from investors or know what investors want, or they're kind of just applying blindly. This is me paraphrasing what an actual founder told me. And then we try to help them understand who is relevant to them based on their specific startup information and based on the investor thesis, right? So we try to find that alignment and make those connections happen. We've been doing this for a couple of weeks now. We're currently doing a closed pilot. I showed Joe, and Joe said, you know, this is something that has potential to help the ecosystem. So yeah, Joe, thanks for the vote of confidence, and hopefully we're able to make some real impact.
Yeah, and you know, when I went through the demo, I was like, Femi, you need to get this out as quickly as possible. And selfishly, I wanted to make sure that, you know, people who are part of the whole community or anybody who's watching this can at least get like a visibility into it. Hopefully they can join the closed pilot, because like, even if they don't use it, I think it can really help just streamline the process, help pull the documents together, etc. So Femi, for this AMA, a lot of people sent questions. I think we have like 5 or 6 questions, which is great. But before we, you know, before you answer this question, because I won't be answering them, can we see a small demo for people on the call? Is that
That's
possible?
fine. That's fine.
All right. So instead of Femi going through, cracking internet. What we did, or what he did, is he recorded it, and I'm just gonna. It's very short. It's literally 3 minutes. I think it'll just show people on this call what the platform does, and hopefully we can figure out, Femi, how you can give people access, or people who care about it. The thing is, this also it's streaming on LinkedIn. So anybody who is viewing this on LinkedIn, let us know. And we'll also share information about Femi at the end of this session. So I'm just going to go into it here. It's going to be very quick. So please bear with me. Just let me know. Folakemi, can you see my screen?
Yes.
All right. I don't know if you can. Don't know if you can hear me. I want to make sure you can hear it.
Yeah,
can you
can.
hear it?
Yeah. Oh, the video?
Yes.
I don't believe so.
Can you see it at least?
Yeah.
You can see it, but can you hear it?
You're not playing it. Do you want to play it?
Did you hear?
No.
Can you at least see the live caption?
No.
No. Can anybody hear this?
No.
Oh,
Joe, maybe what I can do is I can
Talk.
Yeah, I can talk through it as you play the video, just to make sure that would help some people.
that was kind of playing at a 1.5, but I'll slow it down a bit.
Okay, gotcha. Okay, please let me know when it started. Joe, is it ready now? Is it started?
Yeah.
Okay, so what you can see on this page is the sign up page. Basically, if as a startup, I'm going to share this link in the chat for those on this call. It's basically exclusive access for the whole community. So if you click on the company and startup tab on sign up, that's what you see. Just fill the form. You'll be redirected here to the login page, and then put your email in, and you come all the way here. So what you can see on this page is basically 6 boxes, which we use to get some context on you as a business. So this very version of AI, what we've done is help startups do 2 things. Number 1, understand their investability, and number 2, find relevant investors. So these 6 boxes are basically meant to help us get information about you, through which we can assess your investability. So we score people through the team, markets, business model, financials, and governance. Those are the 5 pillars we use to assess investability of startups and to help guide them from the perspective of an investor. So in a couple of minutes, I'm going to show you how it looks when it's fully filled. The green tick is going to show when you fill the form, and the red X is for forms that you still need to fill. And that, what you can see there is the profile completion. As you fill it, the percentages keep increasing. So this is a dummy startup that I created just for the sake of this demo. You can see the investor score is C. You have investor scores A, B, C, D, E, and F to assess the investability of the businesses. And you're going to have a view of what exactly that means in a second. So when you click the Vesta reports, what you see here is a quick overview of the business, your Vesta score, and then here you have a summary. So what this actually helps you do is, number 1, you get to see at a very high level glance how investors tend to look at your business, right? They look at information around your funding needs, the 5 pillars, just one-liners here on the summary page, and potential areas of improvement at the bottom. But also you can see what your strengths and weaknesses are. As you can see, markets is fairly high, but financial, there's some room for improvement. So you as a founder can then say, hey, let me look at the financial side, or the governance, or the business model, to see what exactly the information that's been provided, where I'm strong, where I need to focus on. And what we've done is actually built an AI model to take in all the information that you've presented and showcase how investors typically look at your business, including what they see as strong and what they think potential areas of improvement are, like at the bottom right there. That's potential areas of improvement focused on the business model. So what this will help you do as a founder is just get a quick snapshot of where your business, again, strengths and weaknesses. But something else we also allow you to do is see your investor match. So we have a database of about 40 investors that are active in the African ecosystem, and you're able to search here for a number of them. I can provide that information for those on the call. Again, exclusive access for HoaQ, because this is a closed pilot. And you're able to then search that investor to understand, number one, what industries do they care about? What stage do they care about? What types of investors are they? And last but not the least, mandate match. What that mandate match percentage is how aligned is your business to the investment thesis of that investor. All of this information is information that we got through research and through friends of the house. So right now I practice with HoaQ actually, based on the information I was able to get on HoaQ. The contact investor page is very public, emails and application forms, nothing sensitive is here. But you can see here, this dummy startup is 93.4% match with HoaQ. You can then click on the mandate match to see what the alignment is. Oh, there's a business model alignment, geography alignment, there's a sector alignment, so on and so forth. And then I can save the startup and create your personalized investor view. So if you're ever at an event and you meet an investor and you want to say, hey, is this worth my time? Or should I double down? Or which investor should I focus on? You're able to come here, search for the investor and get some context on whether they're a good fit for you. Thank you very much.
All right. I am not seeing the claps because let me give my claps before all this. All you, I'm kidding. No, like I watched this so many times. I love it so much. Any questions on this demo? And then we can maybe we have some questions, but I don't mind. I'll take some live questions and then we can go from there. So yes, Olafare, please, you can unmute yourself, introduce yourself and go ahead.
Hello, my name is Olafare and I'm an education entrepreneur. So my question is about the letter grade a founder receives. So what would you say is the percentage chance that the business would then get an investment? I know it's early to say, but what do you think that is?
So it's hard to give a percentage chance because as much as we say, hey, this is a good business from a general perspective, every investor has their own investment thesis. From the conversation I've had with investors, they look at the grades, but they place less emphasis actually on the grade, but more on the percentage match and actually the information that it contains to see what information is, what is about this business, what information about this startup jumps out for me, what are they trying to raise, what valuation, does the business model make sense? So the grade helps with some high level sorting, and to be honest, any investor, what their sort isn't going to go hook, line, and sinker and say it's just on the grade. The grade is just meant to help you actually as a founder, guide you through your investability. And as you work through the areas of improvements, you're increasing the grades. So there's a gamification element to it. I hope that helps.
Thank you.
Yeah, thank you, Femi. Busayo, you can unmute, introduce yourself, and ask your question, please.
Thanks a lot, Joy. I'm Busayo, co-founder at Liquify. Thanks a lot, Femi, for this presentation. Actually, I have gone through this before now. We have a profile on Vesta, and it was quite interesting going through this. As tedious as it was, I actually enjoyed it. It was quite tedious, I have to say. Yeah, I actually found it through an application on an investor site. So, I got the invite to go through this. So I did all of that. So my question is pretty direct. What's next after this, right? I haven't, I finished the profile, saw the score, but I haven't heard anything since then. So what typically happens after this?
So what we've been doing since, and thank you for the question, Basari. I appreciate direct questions. So what we've been doing typically is for the startups who have applied, we've actually shared them. We try to share a number of them with investors directly, because what we're trying to do is beyond what is happening right now. We're trying to make those connections happen. And so investors are currently actually going through a number of the applications on the platform to say, hey, what exactly, which of these are you interested in? Do you have any ability to give feedback? Some of them have given us updates saying, hey, this looks interesting, but I'd like to give them personalized feedback around where they are. So a lot of that is more on the development side. So besides, you should get some updates shortly. We'll be able to help you with that. Number one, you'll be able to connect to investors directly on the platform. But even if you don't connect to them, an investor is able to give you direct feedback on your application and on your startup. But what I'll say is, as much as possible, we're trying to share your profiles with investors, and investors actually tell us, are you interested in these? If so, yes, great, tell us and we'll make the intro. If not, why? That's basically what comes next from where we are.
Great, thank you.
If you have any other questions, we can take this offline. I'd love to get your thoughts.
Sure, I'll reach out.
I saw another hand up. I think it was Sydney, but Sydney, I don't know if you still.
Yeah. Hi guys. Sydney from Creative Tech. I work with a company called Workspace Global. Friend of Femi, actually. I was going to ask a similar question to Busayo. It was how, in terms of the vision. I know it's very early days for Vesta, but in terms of the vision, how far?
Sydney, I think we lost you there.
Yeah, I think
the fund.
Sydney, can you maybe just ask the question again? So you.
Sorry about that.
How far?
Sorry about that. Yeah. So.
The internet's not.
How far?
Sorry, Sydney, I'm very sorry. You will need to ask this question again.
I think I got a high level view of his question. It was, how far does filling the form, at least the current version of Vesta, how far does it take you? What we initially built for was to see the value. Number one, how helpful is the investability? And number two, in terms of moving the needle for relevant investors, how much value does that actually create? Because we're trying to make sure that we're building for what people want. What we've found is that it's helpful on both fronts. There are a few things we had to tweak, like Busayo mentioned, on the customer journey, the UX, so on and so forth. But in terms of how far, there's still a bit of a gap between the ability to that you've gotten your score, you've shared your information. We want to create the element of like that direct loop with investors. I think that's the part that is missing right now, and kind of doubling down on my answer to Busayo, where you've created this, and now we've tried to link you with investors, but investors really want to give you that feedback. And what we eventually want to do after this, actually, to speak to the wider vision, is to help everything from the point of, hey, I want to invest, I want to start raising funding, to I have invested, and now I've gotten investment, and now I want to start giving updates to investors. So that's the actual vision. I want to help startups in everything from the pre-investment to the post-investment stage. But like I said, it's still relatively early days. What we've done is at least made sure that they can connect directly with investors on the platform. We're going to be sending more updates where we send investor links to startups, and then they can reach out to the investors directly. And then on the flip side, we get investors to give their feedback, right? Eventually, what we want is, and this is based on founder feedback, is we want to enable 15-minute calls with investors. That's what founders said they want. And we're trying to make that happen based on, again, relevant connections on both sides.
Yeah, thank you, Femi. Issa the Prince has a question. Issa, if you can unmute and take it from there, please.
Hello, Femi. Hello, Joe. This has been an amazing conversation. Thank you guys for putting this together. So I have two questions. So I work in the creative industry. I'm the founder of this company called Creative Council Africa, and our goal is kind of like to to build the creative ecosystem in Africa, starting from where I'm based, Abuja, which is just like a developing market. So one thing I wanted to ask, the access to investors you have, because I know you talked about impact investing earlier. So the pool of investors you have, are they like strictly looking at VC models, or are they open to creative ways of investing? Like they're not necessarily in it for only profit, but for impact as well. So do you have a wide pool of investors at the moment, and how do you plan to expand that pool of investors? And the second question, yeah, if you could go with that, and I'll follow up with the second question after. Yeah.
No worries, sir. I mean, I know your business, so it's not the first time I've heard of it. To be very honest, because we were trying to keep it as a controlled group, a lot of the investors we have on the platform tend to have a focus on just pure ROI. You have a technology platform, or are you building out a service that is venture scalable? Right now, that's what we've built so far. The hope and the aim is to build this out even beyond typical VCs. So we've started having a few conversations, people who just run programs, which we found, and people who run angel networks, because we found that there's a lot of value for those types of individuals to actually manage their programs end to end. And to number two, on the angel side, they don't have all the time in the world. So being able to get some kind of platform like this that helps them would help. And I found that there might be a lot of overlaps between the solution that you're building, which has a lot of software / in-person components. And yeah, so there may be an overlap with a few of the investors that we have in the pipeline. We didn't want to use all the investors we had in our network for the big, because we just kept it to people who were really close to, like Joe, to make sure that we could actually get real learnings. They weren't sugarcoating anything. They invested in actually seeing it succeed. And then we'll widen the scope. So we have a couple more people within our network that we just haven't included yet. But as we build and as we actually cater to those who are close, we'll widen the scope.
Okay, nice. Amazing. Thank you for that. And the second question is, when you talk about like startups, like what stages do you focus on? Because you were talking about the financials here, that they kind of help you check your financial state and stuff. So what's like the typical time in business, would you say, or what's like the average time of operations would you say the platform is suited for?
That's a great question, Mr. So we unfortunately don't build for pre-idea, so a pre-product, sorry. So if you're an idea right now, the models and technology that we'll have to build for you is slightly different. We can, but we've had to prioritize those that have a product in the market so far. Okay. And to be very, very specific, it's the stages that we tend to focus on is we've built a product and you have it in the market all the way through to Series A. So pre-seed, seed, and Series A. Those are the ones that we tend to focus our attention on right now, because we're trying to see how we can learn from them and then cater to those that are on the peripheries. So, but we are thinking of the idea stage, because we have the model. It's just about building it out. But yeah, I hope that answers the question.
Yeah, that answers it. Thank you very much, Femi.
No worries.
Thank you, Femi. So we have one question in the comment, and then we have one question from Danush is still here. Yes, from Komilokmo. Maybe Komilokmo, you can ask the question. I'm conscious that we've got 8 minutes left, and I would like to finish hopefully in 5 minutes so that we can do some brief announcements, talk about next steps, and close it. So, yeah, Komilokmo, please go ahead.
Hi, good evening.
Intro and then go ahead.
Okay, good evening. My name is Gift Komilokmo, and I am a founder. I think on my quest, a founder of a health tech startup. Like, we're focusing on mental health, leveraging education technology to create solution for mental health. And my question, you sort of mentioned it. You said you guys are not catering for pre-seed or idea level. I don't think we're idea level because we're currently building our MVP and we're open to launch it very soon. So my question would have been for the idea level, people that are just still like new in the market, where you've gone amazing analysis based on the 6 points they already mentioned, and then you're trying to know that, oh, I have a D in financial projection, so how can I improve myself? Like, do I have to get access to, like, or maybe connect to like a mentor, like something that they can, like, oh, you have to work on this area, you have to work on this area, or you just leave us to just like go and sort of that yourself and then come back to continue your journey? So that was my question. But you already mentioned that you're not focusing on that people now. So yeah.
Yeah, so we're not focusing on it yet. I think we will, because we really want to help people validate their ideas. But for those that have something in the market, the potential areas of improvement, we try to, and we're still improving this, we try to provide enough tips to help people improve in each of the 5 pillars.
All right, that's great. All right, one last question. Camilo, I'm sorry. One last question, and then we can close it off. But I think Femi will drop his details so that all of you can connect with him after this this call. The last question is: what trends are you seeing in startups that have successfully raised during this VC winter, specifically for first-time founders?
So the specifically for first-time founders makes this a lot harder. What I have found is, so there's this concept of default alive, and I'll try and explain it very quickly. Default alive is basically, every startup is either default alive or default dead. Basically, default alive is you don't need additional funding to survive. Default dead is basically you don't. It's a very binary thing. There's very little middle ground in that regard. And what I found is that the founders who are able to raise even now, even if they're not profitable, even if they're not default alive yet, they have a very good grasp of their business unit economics to showcase to investors that with your money, I can get to default alive, right? Because the biggest thing now is that over the last few years, there's been the grasp on unit economics has been a little loose, where people have just been like, you know what, just raise funding and get more clients, and you'll be able to raise more money, and in the future at some point to become profitable and become a sound business. That has changed completely right now. So the emphasis on your average revenue per user to see customer acquisition costs being sound, the margins being sound has become a lot more. So I would say that even if you're still early, you're still growing, and you're not a profitable business yet, you have your numbers airtight to showcase to investors that, hey, just give me this little bit of money and I will get to the points that you need me to.
That's very succinct and straight to the point. Femi, how can people, or where can people find you? And like, how can they get access to Vestat.ai?
Awesome. So you can find me on LinkedIn. I just put the closed pilot, so you can sign up right now. On LinkedIn, I'm going to add my LinkedIn name. It's Femi Awoniyi. You can search it up, but I'll put the link as well, just to help those that want to connect with me and ask me my additional questions. Again, just for those in this call, I will also put my investor email. If you want to reach out to me directly, ask me any questions, you want to get some context, please feel free to reach out. I left Google for this. I really want to help. So please feel free to reach out. I'm happy to help.
Femi, I don't know how to thank you. I'm so glad that you made yourself available for this great call. I loved it so much. I want everybody on this call to join me to thank Femi for his time, the feedback, and hopefully he'll be able to support you on your fundraising journey. So thank you so much, Femi.
Thank you, Joe.
All right. And before we close very quickly,